Given the recent success in Canopy's stock price, there's been a lot of discussion about whether the company is overvalued or undervalued, and there are compelling arguments for both sides. In today's video, we're going to be valuing and analyzing Canopy from a price to sales ratio, and we're going to be using relative valuation as our method. The means to which we're going to be using our relative valuation is we're going to be using the Vice stocks as a reference rate. Vice stocks are mostly cigarette and alcohol companies. Both of them have interest and business dealings already with some marijuana companies, and with some others also looking to invest in this industry. It is well agreed upon both on Wall Street and amongst other analysts to use the Vice stocks as a relative valuation method, is because they have similar purchasing patterns, and in many ways their businesses are run the same as well, in that from the tobacco side, there's a certain agricultural process, packaging, and building relationships with retailers. And from the alcohol and liquor side, Canopy has directly quoted they intend to go past marijuana as just a commodity product to including it in more premium products as an ingredient through things such as drinks. Now we have two key figures and estimates that we use when valuing Canopy from a price to sales ratio. One is market value, as in how much is this market really worth from a sales perspective. In the short to medium term, many of the prominent experts and analysts estimate the market value to be $30 to $60 billion. As the transition to legalization continues, the black market will dissipate slowly over time. As this happens, the pool or the arena in which businesses can operate in this industry becomes larger, and therefore their profitability and the sales that they can experience tends to increase exponentially. If you'd like a more in-depth analysis of the market value, we recommend one of our previous videos we made. The link to that is just up right here, but you should note that the figures we use to compute the market value in that video is on a much long-term global trend, and therefore the values are a little higher. In terms of market share, we believe from a maximum to minimum perspective, Canopy can have anywhere between 5 to 20% of the market. However, in our humble opinion, we think they can get anywhere from 15 to 20 in a more realistic scenario. The reason for this is because Canopy already has a $4 billion plus backing from Constellation Brands. That means they have a $4 billion cash reserve in their war chest that they can use to pave the way to dominance. They also have the informational support from Constellation Brands, and the synergies included with that. Constellation Brands obviously has a strong global presence. You may have noticed there's Coronas for sale on all four corners of the globe. I think this speaks out to the distribution channels Constellation Brands has. They are one of the biggest alcohol producers, primarily in beer products, in the world. And you could say they know how to get things done from a business perspective. Here's their 5-year return on their stock. On top of that, we think another reason why Canopy can have a large market share is because of their early entrance advantage. They already have conducted business activity in Australia, Brazil, Colombia, Chile, Czech Republic, Denmark, Germany, Jamaica, Lesotho, and Spain, to name a few. They have what's most likely going to be dominance in Canada. In addition, their management team has quoted that they have built business relationships with various entities in the United States in the case that it overturns and becomes federally legal there as well. So we have market share and what we believe to be the market value in terms of sales. We can actually get a gauge of the revenue Canopy in and of itself can achieve, and we do that with the following chart. As you can see, it can go from very optimistic to very conservative. Now the price to sales ratio is the price of the stock divided by the amount of sales or revenue per share that the company experiences. We use the reference rate via the Vice stocks and have a price to sales ratio of 4. Canopy's stock price has fluttered around $60 a share, so the next thing to compute is the sales, which is the denominator, on a per share basis. If you look at Canopy's most recent quarterly filings, you will see that they have 324,550,000 shares outstanding when fully diluted, taking into account options and warrants. If you divide the sales figures we had from the previous chart by the total amount of fully diluted shares outstanding, you get a relative range as to the revenue per share or sales per share that Canopy can achieve. And we illustrate that in the following chart. As you can see again, we go from very pessimistic to very optimistic. Now, given that we have the price to sales ratio, which is 4.0 from the average Vice stocks reference group, we can reshuffle the equation to find P, given these various market conditions based on market share and market value. If we multiply the sales or revenue per share by 4, we get the fair value of Canopy Growth Corp from a price to sales perspective based on the various market conditions, and we have that as follows. Now the whole point of this is to compare that to the relative stock price. So Canopy can be severely undervalued or overvalued based on the market. If we express these numbers in terms of a percentage return on stock, we have the following in the next chart. So where does the value of Canopy lie? Well, for the most part, it depends on what you believe the market will be worth as well as their market share. However, in our opinion, we believe the analysts and the so-called experts give very rosy forecasts as to what the market can be worth in the short to medium term. Therefore, in our opinion, we believe the market in the short to medium term is around $30 to $40 billion. We also believe that Canopy can achieve anywhere from 15 to 20% of the market share. This is an average comprised of dominance in some markets and a weaker position in others. So therefore, based on the chart we provided, we believe the lower bottom tail is the most likely probabilistic scenario of where Canopy's value lies. And as you can see, based on these numbers, there is significant upside potential in this stock, and we believe it can range anywhere from 20 to 60% upside. Now obviously there is a lot of volatility and risks associated with this company because its value is based on a market that's very uncertain and still has a number of unanswered questions. But we are bullish on Canopy Growth Corp in the long term, and we hope this video was informative to you at the very least. We want to thank you guys for listening, and once again, happy investing.